Hi, and welcome to this morning's early Global View video analysis on Tuesday, November 17th, 2015. It is currently 7:45 a.m. U.S. Central Time, and we're coming to you a bit later than usual because we wanted to see the U.S. CPI in case that had any variation that might be important for the Fed psychology. In the event it did not, came in right on target. And also, as this is our first video of the week, as we noted in our commentary yesterday, of course, our sympathy goes out to the victims and families and friends of those in the horrific Paris attacks. So, what does all this mean to the markets? And the answer is that after the break on weak data coming out of the attempt to rebound out of the 2075 to 80 area, the first support below the 2100 area in the S&P, including the breakup that we saw late Tuesday, well, into Wednesday, the 2075 up break never got much traction, even though it had a lunchtime attempt to push back up. And by later on in the day, it was actually putting in a fresh down break below 2072. Now, that's kind of important because that area up there is probably going to represent some resistance if it should get back up that far. And along the way, after getting below the other key support around 2058 to 60, which is where the market is trading now, it's been up to 2060 and it's trading 8.5 higher at 2056.5 at present. It did leave a fresh up break, very minor, yesterday at about 2047, which is right where the market accelerated down as it faded further last Thursday, opening the door to the gap lower and the weakness on Friday that took it all the way down into the 2010 to 2020 support range, which still remains major support. These others tend to be interim levels. So if it can get back above 2060 or so, then it may just end up back at 2075 to 80, retesting the down break and the failed up break. If it can't get above 2058 to 60 fairly soon, which is the exact same problem it had, because that is now a daily chart down break, we will see on the intermediate term charts, then it's been a nice couple day rally, relief rally off the weakness overnight Monday before the opening, because by the time it opened on Monday, of course, it was already strengthening again from 2010 to 20 range. So it could end up back down below 2035 to 40 interim level that's becoming more of an over-under, and back into the bigger support back down into 2020 to 2010. And that pretty much does it for the short-term view of the S&P 500.